Shell been outperforming the energy sector and the broader S&P this year. Now, Goldman Sachs sees more upside ahead. They upgrade the stock today to a buy, $85 price target. It is our call of the day. And Amy Raskin, you do own that number. You own that.
Yeah. Yes, I do. We love Shell. We have been trimming our energy position overall. We trimmed it a little at the end of last year and a little this year, but still overweight energy. Shell has a 15% free cash flow yield, trading at 6 times earnings. Generally speaking, European energy trades much cheaper to U.S. energy for a variety of historical reasons that I think are no longer relevant. So we really like this name for the longer term, although energy had a lot of its run. So just in the short term, we've pulled back a little bit.
All right. So, Joe, you got like at least 15 energy names, either personally owned or in the Joe T. Shell not being one of them. Why is that?
It is not. The geographic.
You can't own everything, obviously.
Well,
but
no,
why?
we're U.S. listed in our nature. Amy is totally right. Shell's one of the purest international plays you could find in the market. Very strong presence, by the way, in Africa, which will be an economy that grows over the coming quarters. Mm-hmm. But just overall, I mean, you've got the Oxy earnings coming up this week, and you're going to be talking about a record quarter.
Those are today.
So
Oxy today.
I think Oxy's tomorrow, actually.
Today, tomorrow.
I think it's tomorrow. But you're going to talk about a record quarter with $2.5 to $3 billion and free cash flow generation, and that's exactly what you want these energy companies to be doing right now. So, a lot of the contraction in energy equity so far year to date is attributed to the free fall in natural gas and the pullback to crude oil itself. But overall, I still believe you maintain an overweight exposure because they have told you on multiple occasions, the CEOs have the incentive to do what? Focus on the shareholder. They are not incentivized to increase the production. That speaks favorably when you're maintaining dividends and increasing buybacks.
Surat.
Yeah, I mean, I tend to agree. And when the CEO calls this quarter have been, hey, our costs are going up right now, but the costs are going up not because we're increasing production, it's because we're maintaining our production, and excess capital will be sent back to shareholders. I think you had a run in energy last year. I think you have to kind of come back, and as soon as you see the economy stabilize, energy is going to be the place to be again. We have a slight overweight as well in energy, and I like to keep it. And if the stocks keep on pulling back because of quote peak earnings, I think the opportunity to buy some of the really good ones like Pioneer, EOG are going to be there.
By the way, Oxy earnings after the close today, the call is tomorrow.
Are you correcting yourself or me?
I'll take the hit.
Okay, thanks.
I'll correct myself.
I'm just making sure.
But the call is tomorrow.
Yeah, I know.
Okay.
But the earnings are today.
Listen, when it's between
right?
you and
I'm
always wrong.
Well, I mean,
that
the earnings,
makes our relationship work.
Well, the earnings are today. I mean,
you're right.
The facts are the facts.
Yes, sir.
If the facts are in my favor, they're not in yours.
Yes, sir.